Now, hey guys, welcome back to the channel here at TradeFX. For those of you that is your first time joining in, if you don't know who I am, my name is Josh, aka the Homie Fletcher, and I'm the owner and founder of the TradeFX Discord community group and Telegram servers that I do run, sending signals as well as trade analysis and fundamental analysis. Why we take trades, why we take them, when we take them, as well as the reasoning behind a lot of these moves that we see in the forex market. One of those moves which we are going to discuss today. I know it's been a while since I've released any videos, any YouTube videos, and that's because I've really been trying to get and brainstorm content and ideas that you guys would enjoy, that you guys would like seeing. So if you do have any suggestions as to what you want to see, then leave a comment in the description and also a like on this video, as it may help to find others that may relate to this or may get some useful information out of this video itself. Right, so what I'm going to discuss today is basically the market movement that we've seen thus far for the week, right? And this is the second week of July, basically, right? And what I want to look at really is the US dollar, right? So if you are a trader and you've been trading for a while, maybe, you know, or you have been trading for the week thus far, you would see that the US dollar is very strong right now. If we take a look at the DXY, which is the US dollar currency index, we can see that the US dollar is actually trending pretty strongly to the upside, right? So we can see that these clear levels right here, and we've been trending for quite some time with this bullish pattern moving to the upside, right? And we do have, you know, there is a reason behind this movement that we are seeing right now. If we look at the economic calendar, and I'm trying to condense all this information for you guys because I don't want to keep you here too long. I really want to put out information that's useful, that you could probably get some value out of in the most, you know, the shortest time possible, right? So we're looking at this week, right? We had some news for this week. We had interest rates for the NZD as well as the Canadian dollar. As you can see, both interest rates for the two currencies, right, for the two economies, they did come out at a higher value than the previous, right? You can see the consensus here was the same for the RBNZ interest rate decision at 2.5 basis points, right? Bias points, sorry, right? As well as for the Canadian dollar, we see that the interest rate actually did increase a lot higher than the consensus was. So, right, we had a consensus of a 0.75% increase. We got a full 1% increase on the interest rate for the Canadian dollar, right? So we did come out with a better than expected result for the Canadian dollar right here. Now, what does this mean, right? Usually when we do have interest rates coming out better than expected, right, or we do have interest rates coming out better than the previous, right, we do see some sort of bullish formation, some bullish momentum hitting on these currency pairs. However, given that right now the economic state of the world, right, we do have high inflation worldwide with all these global economies, as well as supply chain issues, right? So there's a sort of a imbalance between supply and demand for a lot of goods and materials. One of those materials being, we could say, is oil, gas, right, petroleum from Russia. The Russia-Ukraine war, they supplied a lot of these energy sources to all of these other economies, right? So since that war, it has put a damper on a lot of things globally, and we've seen higher food prices, higher cost of gas, and a lot of other different commodities actually increasing in price because of this situation that's currently happening, and hence we do have higher inflation. And how does this lead to the US dollar, you might be asking? So if we look at the US dollar right now, again, we look at the DXY, we saw that the DXY is very bullish, right? At this point, we are seeing some sort of bearish momentum. Maybe we topped out right here at the highs, who knows, right? But when we look at the different charts, such as USD CAD, as well as USD JPY, USD CHF, and any of the major cross pairs, USD cross pairs, we can see a lot of USD bullishness. And this is because of the previous news that we did have yesterday, which would have been the Tuesday, the news that we had the Wednesday, right? So we had inflation rate, core inflation, as well as CPI numbers, which is the consumer price index. Really, that just shows how consumers are spending money and basically gives us a figure as to, okay, whether the economy is doing good or not, or what have you. And this is what the Fed, the central bank, would use to kind of help them determine where the economy is at right now. So as you can see, the numbers did come out positive, better than expected, than the consensus and the previous was, which would usually mean that, okay, the economy is thriving, therefore we could possibly see some sort of bounce back. But again, if we look at core inflation and we look at the US inflation rate, we could see that it has gone up once again from the previous, right? So instead of inflation going down right now, it has again increased. So we went from 8.6% to now being 9.1%. Now, what does that mean, right? This inflation, and it's something that you won't really get, right, from you know, just reading analysis and stuff like that. But this inflation doesn't necessarily have to do with anything related to the US itself, right? This inflation is something that the Fed, the central bank, they don't have any real control over with, right? And this is because this stems from that supply chain issue that we talked about previously. As the year started, right, with the Russia-Ukraine war, we have been seeing this issue becoming more and more present as time goes on, right? With the new sanctions placed on Russia, you know, with oil exports and all of those things, it's coming and it's having a very negative impact globally on the worldwide economy, right? So this inflation is basically based off of that. The Fed tightening their monetary policies, they're, you know, cutting their balance sheets, whatever have you, right? They could do whatever they want with all the tools and assets and stuff they have in place. This inflation would keep being an issue for the time being because it doesn't necessarily stem from the US economy itself, rather some outside factor basically influencing this high inflation rate, right? Because let's say, for example, guys, let's say, all right, we know that Russia exports a lot of energy resources, right? And now because of this war, there's been a hamper on that. So it means that the supply and the demand, there's a growing distance between the two, right? So the supply is barely there, while the demand for it continues going up. We need those energy resources. We need, you know, also they do export, sorry, a lot of nitrogen based products, which goes into agriculture as well. So we do have that also affecting with, you know, food prices going up, cost of goods also going up, and all of this like it's a chain effect, right? It's a chain effect, and that is what we're seeing currently happening. So this high inflation rate did come out. The CPI numbers are good, but we also have a high inflation. Therefore, what we saw, right, was price kind of divvy on that information. So we saw price move down and then it went up, and then we had a sort of an imbalance in between, right? Now the Fed, what their goal is to actually curb that inflation rate. We don't like high inflation. High inflation is bad for any economy. The usual rate that you want to see inflation at is between 2 to 3%, right? And that's a controllable rate for inflationary levels to be at. Now with the high inflation, the Fed, central banks, all of them, right, worldwide, they have to do something in order to curb this inflation rate, because that could lead into recession as well as damper the overall economic growth of whatever economy that you are looking at. In particular with the US, right, we had talks about having a 100, and listen to it, a 100 basis point increase, right, for the US dollar, right? So for at interest rates, and let's just pull up Forex Live here so that you can see it and, you know, we could discuss it, right? So Fed Waller supports a 75 BPS hike, but would go higher if retail sales and housing is strong, right? So this is Fed Waller, one of the committee members, you know, in the Federal Reserve. So we could see right here that we do have, some news events. Fed Waller spoke, and we're talking about comments for recession and a 100 bias point hike, right? Basis points. Sorry, I keep saying bias, right? But we do expect a 100 basis point hike, right? So hear that value, guys, 100, right? Not 25, not 50, not 75, but a full 100, a big 100, right? This tells you that this is a serious issue for the Fed, and they need to do whatever they can in order to bring that inflationary level back down. As you know, the US dollar is also the reserve currency of the world, right? So the higher inflation is, the more strain the US dollar comes under, and therefore the more damper it puts on the global economy, right? There's a lot more stress if this isn't dealt with. So if we just keep on looking, I'm trying to get it to you guys, right? So we just keep on looking here with Fed Yellen, right? So US inflation remains unacceptably high, right? So this is the comments that we had from Yellen, as well as the comments that we had earlier on from her. If we're looking through, right, 100 to the table, we could get 100 BPS rate hike by the Fed, right? So this is something that we are also looking at to possibly see. Looking at the FOMC meeting from yesterday, which would have been Wednesday, and the day before, we do see that overall the consumer inflation print is being at 9%, 9.1%, if you want to be a little bit more statistical, and the markets moved to price in that 100 basis point increase, right? So this is the expectancy that we do have for the next coming 2 weeks. We might see the Fed actually move forward into having that interest rate hike just to combat that inflationary level. And you can see that the markets are currently moving to suit with that piece of information, that expectancy that we do have, because markets are forward thinking, it's future thinking. So news like this, expectancy, things that we could possibly see in the future, these are things that investors tend to dive towards too, because now the US dollar is looking more attractive, right? A more hawkish Fed means that we could possibly see more yields, more returns on the US dollar, right? It's looking more attractive to investors, and that's what we saw happening right now. So that's why the US dollar has been so strong, and we've seen this bullish trend to the upside, and it looks like it's kind of bottoming out right now. But overall, we could see that this has been held to be true for now, right? So since the 5th of July, the starting of the month, price on the US dollar has been continuing to increase overall, right? And this is probably the expectancy that we could get with a strong US dollar bias, right? So for now, the USD basically trending very strongly to the upside. As we continue looking towards what other price expectancy that we could have, maybe we might see some sort of pullback on the US dollar price in itself to enter for possible longs in favor of the USD, if we do actually see that bias point increase. So that's it for this, guys, just to give you a little update on what's happening in the markets right now. If you do have any questions, feel free to leave a like and leave a comment in the comment section. I'll try to get back to you in a timely manner. But for now, if you have to reach me, you have my Discord, you have my Telegram, feel free. Peace and have a good trading week.